Hello, my name is Sumit Agarwal. I'm a Vice President of Product Management at F5, and I'm one of the co-founders of Shape Security. Thank you so much for joining us today. I'm excited to share with you some contrarian thoughts about how you might want to fight fraud in the future. The organizations that we speak to are doing a good job of fighting fraud, but it's taking more and more effort to keep the fraud at bay. The three most common pieces of feedback that we hear are the ones on this slide. First, that your teams on the fraud department are heavily overburdened. They're having to do more and more with less and less. Second, that your application development colleagues who would rather be building user-facing features are increasingly being pulled into security and fraud-related issues. And third, worst of all, your own customers, whether they're consumers, end users, employees, partners, are facing more and more friction in the name of security. These are the kinds of costs that are increasing as fraudsters become more and more sophisticated. These kinds of challenges require contrarian thinking. Our three contrarian themes for the future are as follows. Your job description is your biggest challenge. The only rule for the future is that you don't write rules. And lastly, multi-factor authentication only succeeds when it fails. Let's dig into the first one. Here's a set of job descriptions that are totally normal, well-structured, well-organized, describing network operations, security operations, fraud analyst roles. These are typical job descriptions from any organization like yours and like mine. But here's the problem. The attacker's job description doesn't look so neat and clean. It has no boundaries. It has no limits. The attacker's job description is to find gaps and vulnerabilities, to explore the boundaries between the handoffs from one team into another, and to find vulnerabilities in those locations. Let me give you a real world example of how a fraudster exploited these seams in one of our customers. So to set context, this is a large bank in the Fortune 500 with a market cap of more than $30 billion that experienced a $3 million fraud loss to a single fraud scheme in a single month earlier this year. Now, they have a large IT budget, they have a large security budget, and they have reasonably modern infrastructure. So let's dig into how the fraudster was able to bypass and circumvent so many of this bank's security controls. The fraudster executed 5 steps to pull off this scheme. He recruited mules. He had those mules create accounts. He paid those mules with checks that ultimately turned out to be bad checks that the mules deposited. He logged in to the accounts that had been created by the mules using a mobile device. And finally, he transferred the funds in those accounts to his own accounts on a different financial institution using Zelle, a P2P payment platform here in the United States. I'm going to dig into each one of these steps in a little bit more detail. Let's start with the first one, recruiting mules. Now, as you all know, mules are human beings who are being deceived and thus unwittingly participate in a fraud scheme. The reason mules are so powerful as a tool for attackers is that they are entirely legitimate. When they're logging in from their computers, their network infrastructure is normal. They have good IPs and ASNs. Their behavior is normal. It's not repetitive. It's not high speed. They exhibit no muscle memory. Their data, their personal information, their names, addresses, dates of birth, social security numbers, email addresses, etc., are very rarely, if ever, breached or suspicious. They don't appear in breached corpuses because these are brand new people who've been recruited into a scheme. They're not people whose information was breached previously. Now, you may be thinking, how many people are there that can be tricked into performing this type of activity, into serving as mules? Unfortunately, that number was big before and even bigger now. Because of the unique and unprecedented situation that we're all in right now, there are many more people who are economically distressed and thus who can be tricked. This is an article from earlier this year's from Krebs on Security, talking about how the pool of money mules is bigger than it ever was before. And so recruiting people who are in this state of distress is pretty easy. This is a public job posting on Craigslist. Now, it may not be from a fraudster who's going to defraud a bank in this particular case, but it is not a sincere and legitimate job offer to make $8,000 to $30,000 in just 60 days. These are the kinds of solicitations that you can find all over the internet that are meant to recruit people into schemes that may ultimately lead to fraud. That was the first step, recruiting mules. The second step was getting those mules to create accounts on the bank that was being targeted. Nothing about these accounts was unusual or unexpected. They were perfectly legitimate. And once the fraudsters had caused the mules to create these accounts, The fraudster also asked the mules to give the username and password to those accounts to the fraudster so that he also had access. Now you may be thinking again, oh my gosh, I would never do that. That sounds so suspicious and so strange. But keep in mind a few things. First, ordinary people are not security experts. They don't know what may or may not be suspicious. Second, these are people who are economically distressed. They're hoping for that $8,000 to $60,000 a month for working at home. So there are a lot of things that are going on when they hand over the username and password. And above all, they're not so suspicious because this bank account is empty. So even if they were worried a little bit that there were a security issue, there's really nothing for the fraudsters to steal at this point in time. In the third step of the scheme, after some number of days or weeks of quote unquote work have transpired, the fraudster pays the mule with a bad check. Now, nobody knows the check is bad at that point other than the fraudster. The mule certainly doesn't know. And in the first moment, neither does the bank. So the fraudster pays the mule with this check electronically. I show a paper check here. The mule deposits the check and immediately thereafter sends a confirmation to the fraudster. The fraudster is able to know right away that the check is deposited. And at that point, the fraudster moves to step 4. He logs in using the username and password from a mobile device, not the web. The web browser has been bound to that user, to that device, and that location from which the mule had logged in. This is now a mobile device that's coming in from a different location and hasn't yet been bound to the account. So effectively, the fraudster is taking over the mobile app side of this account, and he uses Zelle, which is a P2P transfer mechanism, to transfer the funds that very same evening from the mule account to an account that he controls at a different financial institution. Now, I'm going to tell you a little later why this is so important, but just bear in mind that Zelle is a P2P transfer mechanism in which you just need somebody's email address. And finally, in step 5, the fraudster has disappeared with the money, emptying out all of the accounts. And sadly, this story ends with the mules themselves being accused of depositing bad checks. So these poor, unfortunate, economically distressed people are finally, at the end of the scheme, left holding the bag. They're accused of having deposited these bad checks, and they owe that money to the bank. The bank isn't going to be able to collect. These people don't have any money to begin with. So let's talk about how this incredibly clever attack, which was stitched together with individual steps that are simple enough, penetrated the bank's defenses. The first is the use of mules. These legitimate human beings who are unwittingly defrauding the bank have legitimate information. They defeated all of the identity checks. They weren't bots, so they sidestepped the bot-based defenses. They weren't automation. And so there was nothing unusual about them except for the volume that suddenly came into the bank. There were enough mules that there was a very small, subtle increase in volume over the normal while these mules were busy creating their accounts. But the security team on the front end doesn't necessarily monitor for that kind of volume. That's something that the application security or the fraud teams do. And so there was nothing else that was illegitimate or odd about the way those accounts were created. The second thing, and there are several others, but I'll highlight 2 that the fraudster did, is that he switched to mobile. He didn't use a browser-based access because the browser-based access had already been bound to the legitimate Mules account. He used a mobile device. And so he was taking advantage of the multi-channel or omni-channel nature of the bank account's applications in order to sidestep some controls. And lastly, he used Zelle, which is very important. Ordinarily, when there are transfers of money between one bank and another, there's some amount of security that can happen from an account to another account. You can verify whether that account is a good account, has received an abnormal number of transfers, and so on. But when you're using Zelle, which is effectively a third-party infrastructure, many of the bank's own controls aren't in place. And somehow or another, the fraudster was aware of all of these things. So ultimately, this cost the bank a great deal of money. They weren't able to recoup that money, and it was a very painful experience. So let's summarize this section by talking about how to deal with these gaps between formal job descriptions. The first one is to recognize and understand that network security, application security, fraud, and identity are converging. These disparate disciplines are coming together. You need to embrace that convergence. You need to cross-train. Your security team should understand fraud. Your fraud team should understand security, both application and network, to some degree. You need to deploy converged platforms. A siloed platform, one vendor doing one thing, another vendor doing another thing, creates multiple problems. The first one is that it deepens the organizational silos that already exist. And the second is that it causes a great deal of resources to be spent integrating data from disparate systems. And lastly, everybody needs to get in the habit of sharing the data that they have that represents ground truth. Network and application security teams should be sharing what they see with the fraud teams. The fraud team should be sharing chargeback files and other forms of ground truth with their colleagues in other groups. The second major contrarian theme that we talked about is that in the future, the only rule is that you shouldn't write rules. Right now, security and anti-fraud capabilities are heavily rules-based. We can look at several different examples, whether it's in a WAF that has volume and velocity-based rules, whether it's in fraud scoring, where you look at something like incognito mode and you raise the score of a profile or reduce it accordingly, or identity, where you have very hard rules, like once a session has been inactive for 30 minutes, you log it out. But these things don't correlate well with mitigating security or fraud issues and incidents. Sophisticated attackers have no problem in bypassing rigid and brittle rules like these. And what you need instead of rigid rules are durable descriptions of what really drives fraud. At F5, we've come up with three very, very seemingly simple questions that are profound in their ability to find fraud. And those three questions are you a human or not? Are you using a bot? Are you using a programmatic way of accessing a web or mobile application? The second question is, are you good or bad? This gets to the intention of the visitor on the web or mobile application. Is it benign or malicious? And the third question is, are you exactly who you say you are? That's a question that gets to the identity of the user visiting the application. So how do we use those three fundamental questions in the context of a non-rule-based AI ML-driven engine? So we have a product called the Shape AI Fraud Engine, and I'm going to highlight just a few of its capabilities right now. So here are some sample indicators that are easy for us human beings to understand. Things like high access diversity. That means a single device accesses a large number of accounts. That's not a pattern that normal human users follow. Copy-paste operations like Control-C, Control-V, you're all very familiar with that. Mouse movements and user behavior. Another area that distinguishes humans who log in perhaps infrequently from fraudsters who may exhibit repetitive motion and muscle memory. High postcode velocity refers to the idea that if you look at the geography of where orders or transactions are coming from, you can often find patterns that distinguish legitimate from illegitimate usage. There are many, many more signals and indicators that we use, but a great many of those are not easy to explain in the context of a conversation like this one, so we'll stick with these human comprehensible ones. Let's take one example at a time. One indicator is the use of keyboard shortcuts, keys like F7, Command, Control, function keys, and so forth. Roughly 50% of illegitimate users use these function keys, whereas only 0.6% of legitimate users use these. But if you're like me and you convert those numbers in your head to 60 basis points of legitimate users, you'll quickly conclude, well, that's way too many false positives to use this as an individual rule. You'd be right if you thought that. But let's look at another rule. Copy-paste operation by itself has a very, very different profile. Fraudsters are 250 times more likely to use Control-V than an individual legitimate user is. And so what you do in a non-rules-based engine is this. You bring together many signals, whether it's copy-paste, the time between keystrokes, non-visible browser events, none of which is able to distinguish fraud from normal usage by itself, because the FP-FN ratio would be too unfavorable. You'd be blocking too many legitimate users and missing too many fraudulent users. But you bring these together in the context of an AI engine that is able to take in a form of ground truth, like your Visa and MasterCard chargeback file, or the human fraud analyst adjudicated report that represents fraud on a monthly basis, and you use that to tune your AI ML engine. That is exactly what SAFE does. It accepts your fraud file as an input, and it produces a set of weightings that end up being descriptors of likely fraud rather than rigid rules. And these change and evolve over time. So let's talk about how you apply this in your organization. The questions that I would ask you to consider for yourselves are, have you stopped writing rules by hand? Because if you are, that's not a good thing. That's not going to be very scalable. Does your system use in real time the monthly fraud file as a source of ground truth to train the AI and ML engine and automatically find features? If not, again, you may be pursuing an unscalable course. And finally, is the system fully dynamic and auto-updating? If not, then you might need to consider a more modern AI fraud engine capability to find features that are based on all of those inputs. Let's move on to the third and final contrarian theme. MFA only succeeds when it fails. Do you impose MFA on 100% of all transactions? And by the way, I call MFA more friction authentication. If you do, then you should be aware, as I'm sure you already are, that challenger banks and neobanks and fintech startups are making their name by delivering delightful user experiences that are still compliant with all necessary regulations, but that are much easier for end users. And if you don't, perhaps it's because you acknowledge that MFA equals friction and end users hate friction. But either way, where you need to go is the same. It is not enough to hide behind rules and regulations and compliance. There are creative and clever ways to meet those regulations while still delivering a better user experience. And in particular, the new generation of users, the ones that are digital millenniums and digital natives, the ones that are mobile first, are demanding these much more friction-free user experiences. There are capabilities like invisible MFA that we and others offer that can help here. But let's specifically talk about that whole point that we've made about friction, more friction authentication, and MFA only succeeding when it fails. Let me give you a real case study that looks at this particular metric, but let's define the metric first. The MFA success rate traditionally that organizations talk about is simply the percentage of times that users who were given an MFA challenge complete that challenge. So if I issue 100 and 75 users out of 100 successfully complete the MFA challenge, I might consider that to be a 75% success rate. But I disagree with that. I want you to remap that to a 75% failure rate. And here's why. Our contrarian metric is that the MFA success rate of the number of times users successfully fulfill MFA is the failure rate. The real success rate that you should be measuring is the number of times users are unable to fulfill the MFA challenge. That is the likely number of people who were suspicious or fraudulent or didn't have access to the MFA token, which may include a few legitimate users. So I want to flip that MFA metric around, that every single time a legitimate user fulfills an MFA in your environment, your risk engine failed and presented unnecessary friction to a legitimate end user. So let's go with a real case study here of another Shape customer. This is a major bank in the United States, a different one from the first example. This bank issued 315,000 MFA challenges on a single day in May, represented by that gray bar, which we're going to break down section by section. Of those 315,000, 6,500 users saw the MFA and abandoned the process. Now, I hope that the majority of those were simply fraudsters or suspicious users or illegitimate users who said, okay, I'm not going to be able to get through the MFA. There may have been a few legitimate users mixed in there, but it's predominantly bad users. Another 6,500 actually tried to complete the MFA and failed. Now we paint those in yellow because that could include some legitimate users, but hopefully again, it's predominantly illegitimate users, excuse me. 302,000 times out of 315,000, the users were successfully able to complete the MFA challenge. Now, by now you're guessing where we're going here. 300 out of 315,000 doesn't represent success. It represents failure. The normal way of looking at that metric is to call that a 95% success rate, but I call that a 95% failure rate because 95% of the time, the risk engine chose to present an MFA challenge to a user who was ultimately able to fulfill the challenge, which for the context of an MFA challenge means that that was deemed to be a legitimate user. Now, you and I both know that that doesn't guarantee that it was a legitimate user, but for the sake of this discussion, we're going to deem that to be a legitimate user. So our contrarian metric says that in this particular use case, 95% of the time, the risk engine failed. That's a very high failure rate. I want to go back over that equation. The number of users who successfully complete the MFA over the total number is the number of times the risk engine failed. And you want to drive that number down, down, down. So let's look at what a much more successful implementation of MFA would really look like. We would like on that given day in May to have presented 6,500 MFA challenges to users who abandoned the process right away, 6,500 challenges to users who tried and failed, and maybe another 1,300, 1,500, 2,000 to users who successfully completed the MFA challenge. And so what that would really mean is that only 10% of the users, not 95%. So those were our 3 contrarian themes. Eliminate formal job descriptions and boundaries and begin to integrate in a converged way your human teams as well as your technical platforms. Stop writing rigid rules that are easy for criminals to bypass and move to flexible models that use ground truth to find features that are subtle. And finally, remap your thinking on MFA to understand that the number of times MFA is successfully completed is actually the number of times your risk engine failed. I hope you found this conversation to be interesting and useful. We welcome your questions and comments. Please feel to reach out to me or to anyone else at Shape and F5. My email is Sumit, S-U-M-I-T, at F5. And with that, thank you so much for your time.